It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Annabelle Drewlers with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Stocks across the Asia Pacific, well, tracking the drop that we had, or sharp drop, let me just underscore that point here, on Wall Street as the AI scare trade takes hold. But Korean tech stocks are cushioning the blow here amid warnings of a supply shortage in memory chips made by Samsung and SK Hynix.
Well, bonds then, they're bouncing on the rush to safe havens, while precious metals hold on to losses that were part of the broader risk sell-off.
Also ahead, OpenAI accusing its Chinese rival DeepSeek of using unfair methods to train its highly anticipated next-generation chatbot.
And the Chinese currency extending gains past a key level, marking its longest winning streak in 5 years. Prominent economists are now calling on Beijing to use the opportunity to loosen capital controls.
Okay, so another day, another sector that's been added to the scare trade sectors. And I think what's interesting is it's showed up primarily, not completely, in non-Asian proxies, right? So
yes.
Logistics overnight. We're getting certainly the tailwind, the headwind certainly because of, it just happens to be correlations in equity markets. But all that being said, the sectors in the AI crosshairs are really showing up and have showed up quite significantly in many, many cases. But when you look at Asia Pacific, right, it's almost as if when you look at the offset, it's really memory, and it's really lifting almost single-handedly the Asian benchmark.
Yeah, I think that's sort of been the main takeaway, really, we've heard from analysts so far. And it's true. Asia is just higher up the AI value chain.
Yep.
So yeah, you actually do have key beneficiaries out of all these moves. But if you talk about the activity we saw overnight, it's getting a very long list now of this AI scare trade. So who would have thought that a company that's worth $6 million on a market cap could cause so much turmoil across the entire session?
Yeah, well, I mean, your future $1 trillion large caps at some point were $6 million market cap, if you think about it that way, right? In terms of the disruptions out there as well. It's the two things I want to point out too. When you look at the equity markets today, well, number one, it's Friday the 13th. Not that should matter in any stretch of the imagination. But when you look at a market like Korea, it's really been the same dynamic we're seeing there, right? In fact, most stocks are actually down. Substantially in terms of negative breadth there, but we're only down 0.6%, and that's down to, again, we woke up today thinking we'd be down across the big tech plays because of all the gains we've seen there, but Samsung is up yet again, so it just goes to show. And of course, separately, there's an element obviously in Japan, which we'll talk about later, of course, in some of the names there in Japan.
Yeah, well, it's just those earnings that keep rolling through, and Xiaoqing is one of the latest, really benefiting from rising memory prices across the board. But let's also just talk about another big story we're going to be watching today, which is what we got overnight from OpenAI. And so they're actually claiming essentially that DeepSeek is distilling US models to gain an edge here. And just to be clear, distilling, it's a type of technique, essentially a compression technique in AI, knowledge distillation, where you're using different methods, where you have a student model that's learning off a teacher model, and that's what they're accusing DeepSeek of using.
Okay, and that's ahead of this highly anticipated, not yet confirmed, of course, release of DeepSeek over the holidays that we're counting down to.
Possibility,
right?
R2 release, yeah.
We're going into the open today, downdraft, right? When you look at, I think, how K-Web traded overnight, the Golden Dragon Index, all indications are we're going to get a drop. But the fact that you have somewhat of a bounce, not so much in NASDAQ futures, you look at other contracts as well, does indicate maybe we've somewhat ring-fenced the worst of it. overnight. The other proxy we'd point to, of course, is Aussie yen, while still trading at the lower end of the range of the last 2 days or so, is seeing a bit of a bounce as well, which is, I guess, a good risk indicator there. Materials very much in focus. Why you are getting a decline, of course, across the big gold plays, and hence you're getting the declines across the proxies there as well. 10-year bonds coming up on your screens, your 10s, all the way from Treasuries down to New Zealand, and we are getting, an extension of the rally still with the exception of Japan, where the story remains this curve flattening, which had a substantial move to the downside yesterday. But yeah, there we go. 2-year yield, bottom of the screen. Okay, euro, yen. You talked about gold and silver coming up on your screen. So, interesting tidbit. While we are nearing or trading near the strongest level in the yen going back about 2 weeks or so, I had to look at correlation. So we're effectively not as strong on the sort of weak yen, stronger equities trade. So that might not weighing on equities as much as this point in time. The other thing I was putting out, which I forgot to mention too. So, you know, the Bloomberg headline this week was Asian equities are outperforming the most outperforming the U.S. by the most this century, the best start of the year, this century, and the correlation actually between MXAP and S&P 500 is effectively half the 10-year average going into 2026. And that does underscore, of course, the I guess ability for Asian equities to somewhat divorce themselves from the rotation out of Mag 7 and rotation out of the U.S. Okay, that's just to say A50 futures coming online. 10-year yield in China, yep, there we go. We're now below not just 1.8, 1.78% on the currency itself, 6.9%. We are slightly weaker. We are, though, on 7 days of declines in dollar China. You make it 8, that takes us, of course, a couple of years back. But currently, of course, we're still on track for the longest win streak on the yuan going back to 2021.
Let's also, as you were mentioning there, really that I guess, the insulation that Asia has when it comes to the fear that we're seeing on Wall Street really being reflected around entire business models and sectors being disrupted. Where it's perhaps been most clear is in Korea, because you've got this chart here, but taking a look at stocks essentially just heading to the moon.
Yeah,
but
let's get the chart up.
It's such a strong equity market story, and JPMorgan there you can see raising their bull case, a 7,500 target on that index.
Yeah, it's quite something.
It is really.
Right? That's the bull case, though. That's the caveat. I think it's 6,000 on the base case. In fact, to tell us more about the target, what gets us there, do we need to go beyond memory and defense and look at, a broader rally in Korea at that? Joining us here on set, Mixo Das, Asian equity and quant strategist at JPMorgan. They've come out, of course, with a specific target. So, yeah, just lay out the base case and the bull case and what gets us to the bull case.
Right. So the base case is 6,000, like you said. The bull case is 7,500. The bull case assumes that on top of what you're seeing on the memory side, on top of what you're seeing on the governance side, on top of what you're seeing in these structural thematics like defense and shipbuilding, you also get a lot of capital repatriation. Now, what we've seen in Korea traditionally is that both the retail and the institutional money tends to leave Korea a lot. And in fact, the lack of home bias, as we talk about in Korea, is quite remarkable. So if most of this, or at least some of this money, starts to come back and invest into Korean equities, both from the institutional and from the retail side, that takes us to the bull case. Of course, all of this, again, assumes that global equities remain kind of in an upward trajectory, because that kind of underpins everything else.
What tempts investors back then? Because the story around Korea has been there for a period. What is it that's missing to really get them to re-engage or engage to the level that gets you to that upper end target?
Yeah, so you say it's been around for a while, but it's only been like 8 months or so, right?
Yeah.
Since the rally got started. And for many investors who are not looking at markets every day like we do, that period is just not enough. So you've seen Korea substantially outperform Mag 7 over 1 year, which is kind of the benchmark that many Korean retail investors would be looking at. But 1 year of underperformance can be written off as a one-off and doesn't really tempt you to bring the money back. But if this continues into the second year, that starts to change the picture. In fact, when we speak with a lot of Korean nationals, we're starting to see that happening at this point.
I'm curious if you can comment at all on the crypto story in Korea, because this is one of the most active trading environments for crypto from a retail perspective, but they've actually been leaving that market and going back into equities. Have you looked at that at all as being a driver?
I mean, we're not crypto analysts, so I don't.
No,
have
just
any
the trading. I guess just
there,
people
yes,
shifting out of crypto and into equities.
It is true that retail investors in Korea, I would say they have 3 big asset classes they play with. Korean equities, which has been shrinking for 15 years, U.S. equities, which has been growing for 15 years, and crypto. And of course, with the performance that we've seen, Korea retail investors everywhere are momentum traders, right? So if you see the performance going bad, then you go look for something else. And that's what's happening here.
I mean, amidst this almost parabolic look at the charts in Korea, has there been any early signs of attitudes changing? This lack of home bias, is that starting to sort of ground itself?
Yeah, so if you look at the retail flows in the Korean market, and we get very good flow data in Korea, so we've started to see some signs of that. Saw a little bit of buying in November and December last year, but then it kind of rolled over in January. Towards the end of January, when we saw that volatility in the Korean market, we've started to see retail investors come back into the market a little bit.
What's your take, basic question, valuations right now, following, 110% rally, give or take?
Yeah, so Korean, if you look at the re-rating last year, it basically just undoes the de-rating from the year before. On a relative basis, right? Like Korea has always been relatively cheaper versus Asian markets, versus US markets, global markets. And what we've seen last year and year to date so far is just undoing the de-rating that the Korean market has gone through in the last 2 years.
And how are you looking at market, concentration risk here at this point in time? I mean, this whole banter, it's Kospi 2 against the Kospi 834.
But that's, so if you, definitely the Kospi 2 have outperformed substantially, and these stocks are the biggest beneficiaries of the rally in memory prices that we've seen. Right. But the rest of the market is doing well too, right? Like you got the governance reforms, which is driving a broad-based re-rating. You got all these long-term thematics from defense to shipbuilding to nuclear to robotics, grid equipment. All of these things are doing well. So if you look at MSCI Korea X, the 2, that's also doing quite well. That's also outperforming Asia ex Japan, which, by the way, is outperforming global equities massively. So it's not just a story of those two stocks. It's kind of a broad market rally here.
Is the assumption that gets us to the bull case, we will need a broadening out of this rally beyond, let's call it memory?
That's fair to say. So all stocks will need to participate. It can't be just two stocks driving the market to 7,500.
Mixo, stick with us because we're going to have more on Asian equities across the rest of the region in the next block. That was Mixo Das there from JPMorgan, staying around. But also, let's just take a look because we're on the countdown to the market openings. And some of the key metrics, we're just talking there about the memory chip play in South Korea, but actually it showed up as well in some of the earnings we had. So Lenovo, for instance, yesterday in the session, we know they've been stockpiling memory chips, but they're also having to look at price hikes essentially for some of their different devices. Huawei, we saw some results there, but essentially forecasting revenue misses with that China AI race heating up. Some of the other big movers, so we've got Sans China, Bank of East Asia reporting later today. We've got that data at the bottom of the hour with China home prices. And then, of course, the rally that we're seeing in bonds and equities, so FX rather as well.
Yeah, so the fix of the day should be coming out in about 2 minutes or so. Apart from that, some sectors to watch, obviously, as Bell was pointing out, in terms of the data points coming through. The most immediate will be the property sector, given, of course, the home price numbers coming through. And, of course, HSBC will be joining us in a couple of minutes to help unpack the property story onshore. Separately, of course, but related to that is the REIT story as far as the pipeline is concerned. Okay, miners, we showed you what's been happening in Sydney, and some of the gold miners there, of course, want to watch. As far as dairy goes, if that's not clear, that's a cow on your screens.
That's a cow.
That's a cow, isn't it? Okay.
Yeah.
Okay.
You can see the ear tag.
Oh, okay. I thought it was a skunk, but anyway, that's
whoa.
Yeah, because they do have a similar color combination.
And that's where the similarities end.
Well, clearly you haven't seen Looney Tunes, and yes. Anyway, but that's just to say the EU yesterday. Well, China, of course, lowering the tariff there in EU dairy, EVs and tech, everything in focus here, of course, as we head into the final session of the week. And of course, I think going into next week, right? So we don't have southbound, no Stock Connect, so we will just have to sort of glide into that reality. Right. Coming up, OpenAI accusing DeepSeek of using backdoors to train its chatbot on U.S. models. We have the details of that story coming up next. Counting down to the open of trade, Shanghai, Shenzhen, and here in Hong Kong. This is the China Show. Right, welcome back. The reference rate, that's the midpoint of the day. Dollar China seeing not a lot of movement. Of course, bottom of the screens is the 6 and the 4 decimal points there. 693.98 against the US dollar. Right, earnings, we talked about Lenovo and, of course, some of the memory and chip plays. And, of course, this is literally almost the value chain of chips coming up on your screen. Memory.
Yeah, that's a good way of putting it. Because remember at the end of last year, we spoke with Lenovo following their earnings, and they were saying that they were stockpiling memory chips and they were pretty confident around the outlook. But you did actually see it playing out in the latest numbers, because they're saying that memory chip disturbance is going to be lasting all year. And you've got analysts, for instance, like UBS, that are saying they're going to have to start hiking prices on their devices throughout this year as well, which they actually did flag to us again in that interview.
What's a possibility, I think, what they said last time, right?
Yeah, it just sort of was like the writing on the wall, essentially. But and a flip side of that, you can see those big moves for Kioxia today, for instance, over in Japan, and they're not in the DRAM space where we're really seeing this acute shortage as players like SK Hynix and Samsung shift their production toward HBM. But at the same time, they are benefiting from rising prices across all memory categories, and they're also benefiting from AI applications that are demanding more data, and that's driving up as well demand for NAND. So that is sort of the story you've got there. But just to recap as well, we got the reaction from Bloomberg Intelligence on this. Stephen Seng, who's also talking about Lenovo and their figures, but essentially saying that they can sustain revenue growth, but double-digit or low double-digit in the fiscal fourth quarter. So they've just reported the fiscal third quarter.
Okay, well, let's get a sense of where. So this is the intersection between the world-beating stock market in Korea and maybe the rest of the region here. For some final thoughts, joining us here on set, Mixo Das, Asia Equity Quant Strategist at JPMorgan. If you guys are correct, turn out to be correct in Korea, where does that leave the rest of markets in the region?
Well, Korea is still our most preferred market in the region, so that's a market that we clearly like. And like I mentioned, we have a base case target of 6,000 on the Kospi and upside case of 7,500. And for most markets, the way we think about it is that the markets are probably going to trade between our base and bull cases into the first half of this year, as we are seeing this wall of liquidity, as we call it, coming into EM. That's partly a function of the weaker dollar, partly a function of U.S. markets kind of going nowhere, but also global investors just trying to diversify away, right, compared to what they've been holding for the last 15 years. So as that happens, all markets in Asia will do well. We upgraded China to overweight late last year. That's a market that we think could be sort of a surprise package for this year, where you got the momentum in Korea sustaining, you got the momentum in Singapore sustaining, you got momentum in gold and precious metals and commodities sustaining. But the turnaround story this year could be China.
And what does that look like in terms of the base and then the upside case as well? What are the different factors that you're going to be watching most closely?
Yeah, so I think the upside scenario in China really results from three things, right? One is policy stimulus, where we are expecting some action as we head into the 2 sessions in March, right? Particularly if they do more on the property side, and that is able to stabilize property prices, that will then spread over into consumer confidence and consumption broadly. So that's one thing that we are very keenly watching. And in fact, we see some initial signs of property prices stabilizing, especially in Tier 1 cities. So that's encouraging. We'll see more of how that plays out. The second thing is the retail money coming into the market. Similar to Korea, in Korea, the money has been going out of Korea into U.S. equities. In China, the money has been sitting in bank deposits. And that needs to move into more riskier assets. And as it moves into more financial products, that might bring more liquidity into the market. So that'll help to bring the China indices both on the onshore and the offshore market much higher. The third thing is success with a lot of these new technologies. AI is obviously very topical these days, but you also got robotics, you got semiconductors, you got biotech, all of these areas where China is doing really well.
Do those points resonate with foreign investors?
Yeah, so the thing is, on the one hand, you got China doing really well on the technology front and on the innovation side, but there is this constant concern from investors, and we met with lots of investors in Singapore and Hong Kong recently, and the constant concern is that technology might be there, but these companies are not going to make money. And the issue here is involution, right? Like China's been trying to push anti-involution just for that reason. The general concern among investors is that even if you have the best technology, if you're not able to monetize it, equity investors don't participate in that. So that, again, is something that we're watching very closely for this year, because the program kind of started last year. We think this is a multi-year process, and if there's more progress made this year, that'll be great.
Views on gold as well. What are you thinking around your targets there?
Yeah, so we have a 666 target, like we like to say, 6,000 Kospi, 6,000 on STI, that's Singapore, and 6,300 on gold. And that's a function of sort of the demand broadening that we're seeing simply. Gold and pretty much every commodity, the price targets are based on supply-demand imbalances. And in the case of gold, the supply kind of doesn't go a lot, but the demand can change a lot. And right now we're seeing central bankers, individuals, basically the demand for gold is so strong that the physical supply and deliveries is just very, very constrained. So as long as that remains the case, gold moves higher. Of course, in all of these momentum spaces, what we've seen in the last 2 weeks or so is that you get positioning crowding. And then, especially systematic investors tend to sell when vol goes higher, and then it causes some volatility. So you can see the chart of gold and Kospi look very similar, even though they're completely unrelated. But that sort of happens. We take it in our stride, and we think that the fundamentals of gold, fundamentals in Kospi and in Singapore remain very solid.
Mixo, great to have you this morning. Yeah, that was Mixo Das there, Asia equity and quant strategist at JPMorgan. Quick check on markets as we head into the open, actually setting up for quite a lot of weakness in the Hong Kong session, already off 1.5% in pre-market, continuing to track those yields on CGBs moving as well. Is that an 8th day now that we're going to be going in that direction?
If it strengthens, it's number 8 today.
Yeah.
Number 8 today.
We'll watch that one, but plenty more ahead. This is Bloomberg.
Right, we're looking at about 1.5% declines here across the early indications across the benchmarks right now. We have weakened back above the 690 handle on the currency. I mean, certainly the weak dollar has persisted going into this Friday. Just keep in mind, in a couple of minutes, home price numbers are coming out, so we'll bring them to you once we have more details and once that drops on your terminals, in our terminals. And just to keep in mind as well, right, so a couple of markets already shut, and I think when you go into next week, there will be no Stock Connect because, of course, mainland will be shut. In a few days next week, also Hong Kong is shut. Anyway, trading debuts on your screens. Plenty more ahead. This is Bloomberg. Welcome back. You're watching The China Show, Friday the 13th, which means it's going to be a Valentine's date Saturday. I've so far refused any temptation to fall for, again, being swindled by the F&B industry. The same menu items, just rearranged and called something else. And
I'm not going to suggest that you stay strong, Dave. Well, don't cave to the pressure.
I will buckle, though. I can tell you that right now. In fact, I've been looking
at the 11th hour.
At the 11th hour. In fact, in the next commercial break, that's when I'm going to pull the trigger on this.
Submit your orders.
This reservation. But anyway, we're also looking at the home price numbers coming through any moment now. Well, we look at that, of course, the open is coming up.
Yep. So we finished yesterday. We finished yesterday in pretty flat, actually, for the session. But you're actually opening this morning to the downside here. A couple of different sectors that we're tracking in particular. Yes, those property numbers, we're going to be watching for those any moment now. I'll just have a look at my screen, see if they're out. But essentially, we're coming into that Lunar New Year break next week as well. And so really maybe traders are just going to be quite happy to have a few days away from their screens, just given the sort of pressure that we've seen of late. What else is, especially for Hong Kong markets, I should say, but it really does depend, I think, on the direction that Wall Street takes, because even though we've been talking about how Asia's a lot more insulated from Wall Street trading, of course, it's very sensitive to the direction it takes during this holiday period. So we've just got those home prices out right now, Dave. You want to go through them?
Yes, why not? Okay, so I'm just going to get some context here, bringing up one of my charts. But the first number that's out, existing home prices down 0.5%, month on month. New home prices are down 0.4%. I'm rounding up, by the way. The exact number is 0.37% negative month on month. Existing is negative 0.54%, which is actually, just give me a moment here, ever so slight deceleration in the price declines. That's also just to say we've seen successive declines month on month in new home prices across 70 cities going back to June 2023. On your screens, we're getting some weakness coming through in the currency. Might be down to the fact that you did have a not a very punchy fix, but this does seem to be somewhat indicative of what's taking place right now. It's also worth pointing out, right? We woke up in Asia this morning, risk-averse session overnight, cross-asset, everything from equities, very strong bid across the bond space as well. Gold obviously has seen better days, but yes, we are continuing to track higher here on dollar China. Anyway, while we wait for more data, why don't we have a look at how we're opening here in Hong Kong, Belle?
Yeah, and actually just still on that property story, I did want to take a look at how China Vanke was faring, because yesterday we saw shares rising as much as 8% in the session, but there was some reporting out that essentially they could be in line for a rescue package. You're seeing that stock today just a little bit under pressure so far, but also keeping a close watch on what's happening in the tech space, because we've seen a lot of pressure, as I said, for the Hang Seng Tech Gauge, and particularly notable for names like Alibaba, Baidu, Xiaomi as well. But the AI story, I mean, look at Zhipu there. ZAI, of course, yesterday coming out with this new model, or a model update, essentially. This is the GLM Foundation model. It's the 5th iteration. And yesterday, I mean, it was gains of more than 30% actually for that company. So continuing to translate across the session today. Minimax, of course, the other real startup that lists on the same day, or day after actually, of ZAI, also gaining there for another session. SenseTime, a bit under pressure. It was one of the early leaders, but it was earlier added as well to the MSCI China gauge. Also taking a look again at those property stocks. So under pressure here so far in the session today, but just recapping those China property numbers, because we have seen new home prices, as you said, falling for another month, essentially.
Yes, negative 0.37%. And yeah, just also say that in terms of some of the index changes, we forgot to mention that it's the quarterly review of Hang Seng, and I think that comes out later today. Just keep an eye on that, of course, as you make your way and sort of glide into this the Valentine weekend. Okay, let's talk about the property space right now. How have things changed? Not so much month to month, but certainly I think it's worth pointing out from on a year. How have things improved? Where are things improving? Where are things fairly stagnant, if not the opposite? Joining us here on set, Michelle Kwok is head of Asia Real Estate Research at HSBC. Good morning. Very nice to see you. Thank you for coming in.
Good morning.
Initial take? Well,
initial take, I think, is more or less within expectation. I think home price weakness is something that we have to continue to contextualize and think about what that actually means. We've already come a long way. Prices have more or less, I would say, been hovering around a fairly low level for quite some time. What's important at the moment is, with all the policies that have been building up into the data release and into the spring season, are we going to see better sales? I think that's really the critical factor driving a recovery from here. So home price weakness, probably I would say, don't read too much into it. But what I would pay attention to is actually how the secondary market is going to fare. What we have seen the last 8 weeks, I would say, is a progressive stabilization of secondary home price. The number of secondary listing has declined. And what that actually means is that existing home buyers and homeowners, they're actually not so urgent to offload their property anymore. So I think we're off to a fairly good start. And I think the year-to-date rally that we have seen really is a reflection of the optimism for 2026.
What's driving that optimism? Why are people less inclined to offload their used house or secondary home?
Well, so I think there are two things, right? The first is the State Journal that was published in January. And subsequent to that, I think there is this policies that was building up. Up until today, we had 3 to 4 important regions coming through to announce different packages. And all of this, in terms of the intensity of these packages, right, it's actually setting us up to rebuild expectation that the Chinese government actually cares about the housing market. And so that stabilization narrative is playing out. And what's also very important is that fourth quarter last year, we've seen expectations being quite low. And so from a fairly low base, for us to be rebuilding something here, that's basically low-hanging fruit.
What about transaction, not value, volumes specifically? What are you seeing as far as that metric is concerned?
I think for secondary, important to talk about secondary first, because usually secondary leads primary. So secondary, when we see some of the key cities, say in Shanghai, we've had stabilization of volume for a couple of months already. And that's very telling, because if you have volume stabilizing, listing coming off, that's a very critical sign that demand is more or less coming back, because home prices have corrected enough already. So there is actually value in purchasing property after the correction that we've seen over the course of the last few years.
So I guess that the sense of whether we're actually heading in an improved direction and the sustainability of it, you're saying we could actually get answered within the next few months if you start to see more positivity out of those spring sales?
I surely think so, because for us at HSBC, we have been talking about 2026 inflection since 2024. We stick to that view. We feel quite confident. Inventory is making some progress. Headline number, national inventory is down a little bit, low single digit. But we do have around 18 cities or so with more than 10% decline in inventory. So for me, that's a very encouraging data point. It takes time. This downturn that we have seen is the first of this scale and magnitude. But I think the Chinese real estate market is the one market that has been through this properly. So we have seen consolidation in a very large scale. What we have also seen is that the weaker developers being weeded out. So we're left with a fairly healthy universe of players that were to come back and demonstrate their resilience into a recovery.
How would you describe financing conditions across?
I think financing,
Vanco, for example, just as an example, right? So how do you look at that? Those it's a stabilizing story, but every now and then you get a really bad headline like this.
Yeah, so I would say incrementally, the number of headlines we get, it's I would say quite minimal. Vanke is an idiosyncratic risk to us. This is something that we look at as very specific to China Vanke. The rescue package, if it does come through, 80 billion, involving 20 billion of a placement, I think that is actually a very big package. It's even above what the upcoming maturity would entail. So our view here is that if it comes through, great, but even if it doesn't, our base case is that Vanke has to go through debt restructuring, and that's idiosyncratic to China Vanke. But the good news here is that with this news coming through that there may be a package for Vanke, it's actually going to be beneficial to the quality private developers, because what it actually means is that these developers could benefit from lower funding costs in the offshore market. And so whichever way we look at it, I think if it does come through, it's great for Vanke, great for the market, great for sentiment. But if it doesn't, our view has been that this is idiosyncratic. It's a Vanke-specific issue. The rest of the universe is actually tracking along fine.
Is there anything that tests the optimism in that case that we see more of a recovery or an inflection point, to use your words, this year?
I think it's very important for us to keep a very close eye to March data after the Chinese New Year, when we approach this peak pre-sale season. If March does well, and importantly, if the policy continue to come through to support the recovery narrative, then I think the confidence of market building that 2026 would have a stabilization or even a progressive recovery that would play out very nicely.
This pipeline of REITs, very niche, obviously, we're getting the pipeline, but does that signal anything to you as far as what the health of the monetization is concerned, or is that also idiosyncratic to those specific issuers?
For these REITs, like we talked about it last time I came on the show, REITs is something that is, I think, getting more and more popular onshore because interest rate is very low onshore.
Okay.
And so there's this hunt for yield, and the REITs actually come in quite handy. What we have seen is a nice compression in the yield after these assets get actually spun off. And so it actually demonstrates that there's actually huge demand for these stable yielding asset vehicles. The challenge is, can we keep up with the pace of supply? Are we able to find sufficient assets with that quality and stable income generating ability to be able to qualify to spin off? So asset monetization is something that we'll keep a very close eye on. But I think on this, right, we have to focus on the developers that actually have a large enough and quality enough portfolio of shopping malls. And this is actually one of the reasons that we feel quite optimistic about not just residential this year, but I think the quality landlords actually have a lot to demonstrate in 2026.
Michelle, great to have you back on Bloomberg TV, and enjoy your break next week as well.
Thank you very much.
Have a lot to eat.
Yeah, that's what we were saying just before in the ad break. Everyone's got big food plans for next week. Michelle Kwok, the head of Asia Real Estate Research at HSBC. And coming up, the US and Taiwan strike a trade deal, cutting tariffs and channeling billions of dollars in investments into American energy and tech projects. We'll have the details next. This is Bloomberg. OpenAI has warned US lawmakers that its Chinese rival DeepSeek is unfairly extracting results from leading US AI models to train the next generation of its chatbot. Let's bring in our China correspondent, Min Lo, to tell us really more about the accusations here. This is quite a big one that's being levelled by OpenAI.
Yeah, it is, Belle, and OpenAI is essentially saying that DeepSeek is free riding on its technology using distillation technique. This is a technique where you use an existing large language model to train a new large language model instead of training it from scratch using a large amount of raw data, which obviously will be much more expensive and less efficient. So OpenAI is saying that they have found DeepSeek employees using third-party routers to access its output in order to mask their source, and that they're also writing codes to access the output in a programmatic way. So this is a serious accusation that could really erode the credibility of DeepSeek. And OpenAI is also framing DeepSeek as a national security threat because of its bias towards the Chinese Communist Party, its censorship of results, and also the fact that it doesn't charge as much as other U.S. companies, and that could erode the market share of U.S. companies as well.
Has DeepSeek responded, and what does it mean, if I'm not overthinking things, in terms of relations between the two countries?
So we haven't heard from DeepSeek, but we know that OpenAI has filed and sent a memo to the U.S. House Select Committee. And we had already heard from some Republican lawmakers who say that this is a classic Chinese Communist Party playbook where they would steal, copy, and kill. So it really depends on the momentum in the White House, right, and whether lawmakers would work on, coming up with new laws to retaliate against DeepSeek, whether it's putting it on a blacklist, more sanctions, or perhaps even rolling back the latest loosening of restrictions when it comes to the export of H200 chips to China. So we'll have to see what happens. And obviously, this could potentially derail the existing trade truce that U.S. and China has as well.
Min, thank you so much. Min Lo, our China correspondent there. From one front to another, you have Washington and Taipei finalizing this trade deal to cut tariffs and also boost market access for U.S. products in the Asia-Pacific. Goods from Taiwan will now face 15% tariffs, with some exceptions for things like tech and pharma. Now, Taiwan's pledging to buy $44 billion of U.S. energy and also further open its markets. But uncertainty, it's a very long introduction, this. Uncertainty remains over Taipei's promises to invest hundreds of billions in U.S. chipmaking.
All right, let's bring in our Bloomberg politics editor, Laura Davison, joining us this morning. So, Laura, this has obviously been something that's been I'm not going to necessarily say hard negotiated, but it was certainly negotiated over a long period of time. So what's the significance of this pact?
So the significance is that they finally inked it. They had a signature. They had the whole ceremony in Washington today. But what's noteworthy is what's not in this deal. As I mentioned, all the chip-making promises, pledges, that were talked about when they initially announced this last January, that there would be $250 billion in terms of Taiwanese companies investing in U.S. manufacturing and plants, and then another $250 billion of loan guarantees from the Taiwanese government. That is not really articulated here, and that really sets up a problem going forward. The Japanese really are experiencing this right now as they're negotiating with Howard Lutnick, trying to kind of hammer out the details of this $550 billion investment fund. There's negotiations going on right now in Washington, and the top negotiator for Japan came out and said that there's still a big gap. And if that's what he's saying publicly, behind closed doors, it's likely even more contentious. So this is, just kind of an indication that these deals can be struck, there can be lots of fanfare, but there's still a lot of details to be worked out in the back end when the rubber hits the road.
In terms of the U.S. commitment, in terms of investment into the Taiwanese market, what do we know about that part of the agreement?
That also is a little bit hazy. There, have been some, for key industries looking at agriculture, looking at tech, looking at, but there's not a specific plan of numbers when that's going to happen, a timeline for that. So a lot of this still has a lot of gray area. It's sort of handshake, pledge, promise. But this is where, particularly with Trump, things can get a little bit tricky. If he decides he doesn't like how something is going, it's not moving fast enough, just ask the South Koreans. They experience this of having a deal and then having him renege on this deal. It can really create a lot of difficulty for, kind of companies that need certainty or governments that had planned on something if suddenly a true social post hits the wire and the deal they thought they had is no longer in existence.
Yeah, and a lot of pressure, I guess, when it's really coming down to TSMC and what their CapEx plans are as well for the US. Laura, great to have you. That was Laura Davison there, Bloomberg, Washington Deputy Bureau Chief as well. We're going to be getting reaction in the next hour from BofA Global Research. That's after they almost doubled their Taiwan growth forecast. That was earlier this week to 8%, earlier at 4.5%. But what they're saying is a relentless AI frenzy. We'll have more ahead. This is Bloomberg. In some world news this morning, Bloomberg's learned that Venezuela plans to grant more oil production land to Chevron and Repsol. Sources say officials in Caracas are preparing to award the exploration and production blocks as soon as this week. U.S. Energy Secretary Chris Wright has toured a project operated by Chevron in Venezuela's Orinoco oil belt. Washington's push for private companies to rebuild the nation's energy sector. President Trump says he can see negotiations with Iran stretching for as long as a month as he seeks a diplomatic agreement that would roll back Tehran's nuclear ambitions. He also says it will be very traumatic for Iran if it fails to reach an agreement. Trump's comments come a day after he met with Israeli Prime Minister Benjamin Netanyahu at the White House.
It's ultimately up to me. If the deal isn't a very fair deal and a very good deal with Iran, then it's going to be I think a very difficult time for them. I'll talk to them as long as I like, and we'll see if we can get a deal with them. And if we can't, we'll have to go to phase two. Phase two will be very tough for them. I'm not looking for that.
Russia has set out proposals that could see it embrace the dollar again as part of a broad economic partnership with the Trump administration. A Kremlin document reviewed by Bloomberg says Moscow sees shared interests with the US, including investments in natural gas and critical raw materials. The plan would be a reversal of policy and could weaken the relationship between Moscow and Beijing.
Okay, that's the dollar on your screens, really at 1182. We've come from north of 1200, means on a dollar China sort of labeling perspective. This is year to date there, right? So we've gone from, we took out 7 last year, and certainly we've been trading below that. At 690 was, of course, the level we were watching very, very, very recently. We're just above that right now. Let's call it down 1%, stronger on the Chinese currency. On a basket basis, it's also worth pointing out the yuan on a basket basis is up about 2.5% from the low last year, which effectively means we're looking at effectively a stronger Chinese currency, not just against the dollar, but against the basket of peers there.
Yeah, the basket being really a very important metric to track. But just on that point of Strengthening. We've actually heard from several prominent Chinese economists because they've been calling for looser capital controls and arguing that a weaker dollar provides an opportunity to boost the yuan's global appeal by increasing its convertibility. CICC's chief strategist says conditions are becoming ripe to push for such reforms without provoking massive capital outflows. And a Tsinghua University professor says this year and next are the strategic window for opening up that capital account.
Yeah, I think those were really the same comments. And I think for our viewers who want to go back and maybe look at some context, we did have, of course, CICC on, I would say, about a month and a half back, early December, underscoring why a stronger currency does not run counter to efforts to reflate the economy. And of course, it does help. It comes from the chief strategist, who, by the way, also came previously from SAFE, which is the Forex regulator. Right. Right. Have a look at markets right now. That's certainly an exercise. There is a window of opportunity to revisit, of course, capital controls. And, of course, ever so slowly that has been opened up. Logistics stocks. Okay, so this is really, I think, for one, we are getting the mirror, the same direction in terms of market reaction to what we had overnight to, things like trucking stocks, for example, right, overnight as it pertains to this AI scare trade. Very quickly, let's have a look at how we're doing about an hour, 25 minutes into the cash market session. We're down about 1.1%. Zhipu's coming up. There we go, bottom of the screen, still up 17%, now losing count. But yes, it's rallied quite substantially. Plenty more ahead. Second hour of the show coming up.
Welcome back to the China Show this morning. Taking a look at the Hang Seng half an hour into the session, and I think Mark Cranfield really puts it best on the MLive blog because he's saying Chinese tech stocks, they can't wait for that holiday break because they've been really under pressure today. And actually, when you take a look at what's declining the most on the benchmark, it really is still those big tech names for another day.
Yeah, 700 HK is coming up on your screens. That's Tencent. Baidu is down even further. In fact, more than double the declines we're seeing in Tencent. And this really has been a space that has struggled for traction, right? In the, should we call it rotation or this emergence? Let's call it this emergence of new tech plays in China, and Knowledge Atlas, Zhipu, ZAI, of course, is just another iteration of that. Another 18% up. Weren't we trading in the 200s just very recently on that? But of course, as pertains to the benchmark itself, Hang Seng Tech's down about 1%. Speaking of benchmarks, flip the page, please. Miners across the region under pressure. While we flip the page, Hang Seng, the index, the quarterly review, and we'll get a better understanding of what any changes might be at the end of the trading session today. Miners under pressure with gold taking out the 5,000 to the downside, of course. Nikkei, Kospi, Topics, and Straits Times Index. So Mixo Dow joined us earlier on. So it's 666 as far as their tagline is concerned. So 6,000 base case on the Kospi, 6,000 base case on the Straits Times Index. The bull case on the Kospi, as you can see, is going still moving against the grain. 7,500 is the bull case coming through there out of Mixo's team. And really on the back of this broader risk aversion is this, we're catching a bit across bond markets today.
Yeah, a bit of a flight to safety and not that surprising when you put it in the context of what we saw in the US overnight. But let's get more on that now. Bring in Lian Ting Tu, our managing editor for Asia Equities. I think what's kind of surprising this week, Lian Ting, is that we've seen the Asian benchmark rising for every single session, even with seemingly every single day we were coming in a different sector getting hit. But today, it does seem like we're finally getting caught up in this mood.
Yeah, still very resilient if you compare to moves that we saw in NASDAQ overnight. So yeah, we've been talking about how Asia stocks, especially those heavyweights, are well positioned in the AI supply chain. And today, or more recently, in recent days, we're seeing numbers showing up that foreign investors are actually putting money into these stocks. If you look at Samsung, which saw the record amount of inflows from foreign investors yesterday, and the stock was up more than 6%. I believe the stock was also in the green today, last time I checked. And if you look at Taiwan, this week was a holiday-shortened week, only three trading days. But this week we saw third largest inflows from foreign investors in Taiwan's history. So really, people are looking for haven. So in a way, it's the U.S. loss becomes Asia's gain.
Within Asia, I just want to talk about, you mentioned Taiwan, and then obviously Korea has been front and center of most equity stories recently here. Globally, I should also mention that just to underscore the point of Korea. But Tencent, I guess, as a proxy to just the, this group of Chinese platform stocks that have really lost favor. I think the stock is down 22% off highs, which is quite a lot given, some of its peers, Lianting, have gone the opposite way and more. Talk us through this divergence here.
Yeah, Tencent, as you guys, are talking about AI apps every day, but Tencent seems to be really missing when we talk about, the likes of Zhipu coming up with new models, the likes of Alibaba keeps updating their Qianwen app, but Tencent hasn't really come out with much to talk about to the public investors about their AI progress. I think that is now considered by investors as Tencent's not going aggressive enough in this AI endeavor versus its domestic peers. So that's one thing. The second thing is Tencent usually is considered as, very conservative in their spending, but recently it has joined this subsidy war or price war to give out red packets to the users to get them to sign up. And that is a move that we saw among many Chinese AI companies. But Tencent joining that is also making people worry that that's going to compress its margin. So these two things are really leading to the kind of loss of confidence in Tencent and also the big underperformance for Tencent.
Lianting, thank you. Lianting, too, they're a managing editor for Asia Equities. Just to also mention for Tencent, it's come down so much and so fast. The 14-day RSI is now at 26. 30 is what most people consider, of course, a threshold for oversold conditions. And at 26 is the lowest 14-day RSI going back to 2022. So 4-year lows on that momentum metric. Right. Just ahead, we briefly talked about Taiwan. We just now alluded to it as well. BofA joins us next this week. They've jacked up quite substantially their growth forecast here for Taiwan from 4.5% to 8%. Will talk us through, of course, the thesis there, what the risks are, the opportunities within that economy. Coming up next, this is Bloomberg. Right. Welcome back. Right. Just a couple of headlines to tell you about coming through out of mainland China, Shenzhen here. So talking about, well, they've issued a notice to regulate gold market operations. Firms cannot conduct illegal gold trading activities, and that Shenzhen says that says to ban illegal gold. Okay, that goes without saying, and that they can't conduct pre-pricing transactions. It's worth pointing out, even before the headline drop, under pressure already across some of these gold mining names on the back of the pressure in gold that we had overnight following that almost cross-asset declines in the risk-averse session overnight. But yes, this is the latest here as far as Shenzhen is concerned. And gold. There we go.
All right, let's also shift tack to what's really been a big story in the last few hours, which is the US and Taiwan finalizing a trade agreement to cut tariffs, boost investments into US energy and technology projects as well. So under the deal, Taiwan's pledged to buy more than $44 billion worth of LNG and crude oil from the US. The island's also going to open its market further to American goods. The agreement could boost the resilience of US supply chains, particularly in the high-tech sectors.
Okay, yeah, so this comes ahead of this GDP print, which is coming out today. I think it's the final print, if I'm not mistaken, here for 2025. And economists actually expect, okay, let me just look at my forecast, right? Because there's the 2026 number, and BofA will be joining us to underscore why they've jacked it up from 4.5% to 8%. But today, the print we're actually expecting, as far as the survey is concerned, is fourth quarter prelim. Okay, that's okay. I'll correct myself there. 13. Let's call it 13%. But 13%, that's going to be the fastest growth clip going back to about 1987. Just to underscore this pickup in growth. I think it has to do with AI. I'm not sure.
You got a hunch.
Yes, that's just it. I woke up with that thought. Joining us here on set to put meat on the bones of the story, Xiaoqing, Greater China economist at BofA Global Research. She and her team are among the most bullish on the economy this year, recently upgrading, as we were pointing out, their forecast from 4.5% to 8%. Good morning and very nice to see you.
Good morning, David.
8%. Okay, talk us through what goes into that model.
Yeah, like today's number might be 13%, might be 12.7%. Well, like it's likely going to be a blowout anyway, right? So this doesn't change the story. So Taiwan's economy is like AI supercharged, K-shaped economy, and that story is going to hold. We think that this is mostly about Taiwan's central role in the global supply chain for the AI capex products. So Taiwan's really riding in this once in a generation wave of AI capex.
It's nearly doubling, though, that forecast. So what were the different inputs that went into the model, and what really influenced it the most?
Yeah, we were talking about the incremental changes, right? As you talk about, there's this trade stabilization, currency stabilization, and, AI momentum appeared to hold even better than we had expected. And also, like in the fourth quarter data, we're seeing some of these consumption finally showing some nascent recovery.
What doesn't make sense to me from just a purely theoretical textbook paradigm is if growth is at, let's call it 10%. If growth is at 10%, why is inflation only at 1-2%?
Yeah, that's a really great question, because we're seeing this really K-shaped economy. While we have the 8% or 10% surge on the economy, it only benefits about 5% of the population. Because if you add up all those technology industries, related industry services, add up those employees, they account for about 5% of the population. So these people are getting the pay bonuses, but the rest of the economy isn't doing that well. Services wages are quite stagnant, inflation is quite modest. I mean, non-tech businesses are faltering. They're facing a stronger currency and more of this trade tariff disruptions.
Yeah, that is really one of the key themes that has emerged in Taiwan is just, yes, a lot of billionaires being minted and also just a lot of rising inequality that we're seeing. So how much of a drag does that become then on the print or on the figures, your expectations at all?
Yeah, I think the consumption recovery is a bit on the slow side, and especially for the policymakers. Like if you are policymakers in Taiwan, you have this really difficult balancing job to do, right? So on one hand, you have all these surging growth that you don't have much control over because there's all external demand, you don't have much control over it, and then it's driving the headline growth. But on the other, you have to watch out for the small guys, for the weaker part of the economy. The inflation is still quite modest, below 1.5%, and the property market has already cooled down, and you're seeing, the non-tech businesses are not doing so well. So what does the central bank have to do, right, to deal with this?
It's quite a dilemma. So what should they do?
From our perspective at BofA Global Research, we basically expect the central bank to hold rates steady throughout the rest of 2026.
Okay.
And the earliest window for them to switch to a tightening bias is end of this year and early 2027.
On the story around capex, because obviously Taiwan is such a big beneficiary out of all of these spending plans, or companies like TSMC rather specifically, but they're also under pressure to move their operations to the US, and there's also a really big push on building up self-reliancy and self-sufficiency in the States as well. So does that end up becoming a challenge, do you think, for Taiwan down the track, just given how much they're being really pushed to move their more advanced production away?
Yeah, definitely that's a crucial question for Taiwan's economic future, right? So I think at least in 2 to 3 years, that technology leadership that Taiwan has is now being challenged. And remember that TSMC is not only one firm. You have hundreds of suppliers of it in Taiwan, and that's exactly why Taiwan's supply chain is so mighty.
As an economist, it's rare that it's almost the economy is beholden to just a handful of companies, if you want to put it that way. How closely do you track? This is a very strange question for me to ask an economist. Monthly sales numbers.
I track them every month, every single month, and I actually do charts like when I make forecasts of the capital formation and capex and export numbers of Taiwan. I do look at the TSMC numbers, and they track quite closely.
Are they? Okay.
Past few quarters quite closely. So.
What else are you watching? What are the sort of risk cases or risk factors that you see for this year?
Currency swings is definitely the biggest part. Now the currency is quite stable. It's expected to be stable, but that could introduce some risks if there are any big swings. Some of the more AI capex, if the boom either accelerates or decelerates faster than expected, that could introduce some risk. Geopolitical tensions always there, and so all these are sources of risks.
What about this trade deal that was inked very, very, very recently with the U.S.? How are you looking at that?
Yeah, I saw the headlines in the morning. Yeah. From macro standpoint, I think this is meaningful in terms of reducing the uncertainty, reducing the policy uncertainty, rather than boosting the growth in a mechanical manner. So if you look at Taiwan's exports to the U.S., the majority of it is exempted from tariffs anyway.
That's right.
So it doesn't really move the needle very much for the non-tech exports. But for the technology sector, this is really removing this policy overhang for them, and it's likely going to keep the AI-driven momentum going uninterrupted.
No, go ahead.
No, I was just going to ask further on that one, because we were just speaking with Laura Davison before, who leads some of our political coverage in the US, and she was saying that still there's a lot to be hashed out, and then there has been...
On the detailed side.
On the detailed side, because, yes, you get that sort of initial relief, but then, as we've seen in Japan and Korea, there's been stumbling blocks that have happened post the initial accords being signed. Do you weigh up that risk at all, or you're not so concerned about it?
It's not in our baseline case. Let me put it that way. Yeah. So as long as this is stabilized and the AI driving the AI super cycle is still the gist of the story, I think Taiwan is in a good place. Outside
of AI and maybe the odd individual climbing a very tall skyscraper, what else do you think the global investors should be cognizant of as far as the Taiwan story is concerned?
Why they should care about Taiwan, right? Why should they care
outside
about Taiwan?
Outside of AI, what else is going on there?
I think it's related to AI, but it's not really exactly about AI. I think Taiwan is not a big economy, but it really offers an early look into what an AI supercharged K-shaped economy could look like. On one side you have this surging growth, surging headline growth, and on the other side you have this people not doing so well. Domestic demand is not doing so well, and that's why I think that policymakers do have to care about both this surging headline growth and the domestic demand, and it's a really difficult balancing move for them.
It's almost impossible. It's almost like this. We talk about this every day this week, right? The AI scare trade and how it's displacing Main Street sectors, and I think the K-shaped economy is a very good example of that.
Yeah, and certainly that risk of job loss is really being inflicted across a lot of different types of roles as well, and ones that are maybe also further down the income graph or chart or table. But anyway, we'll leave that there. That was Xiaoqing. Thanks so much for joining us. That was Xiaoqing P there, Greater China economist at BofA Global Research. And still ahead on the China show, Hong Kong is grappling actually with a shortage of bankers to handle the hundreds of companies looking to go public in the financial hub. We'll have the details next. This is Bloomberg.
Right, welcome back. We're going about an hour into the cash market session, 50 minutes to be exact, and the two stocks coming up on your screens will be marking 51 minutes as public companies here in Hong Kong. Should be coming up on your screens. One is doing maybe slightly better than the other. by a margin of about 220 points. This just underscores, I mean, this is almost like, just how the sausage is made, right, producing a show. This has become a template to the China show, for the China show. Having a daily look at the list of companies coming to the market, raising money, it's really become a feature of the show. Just underscores how busy ECM bankers have been. In fact, there has been now a shortage of bankers as the city experiences just this resurgence in IPOs. And January marked the busiest ever start to the year for new listings. To tell us more, our Asia ECM reporter Dave Sebastian is here to tell us really why this banker shortage is happening.
Yeah, so Hong Kong IPOs have just come off a 4-year high, and it's been very, very busy recently. And as a result, bankers have way too much on their plates. And, this comes off after several years of downturn in deal making when banks were, like cutting jobs just last year, we saw a 4-year high, and so they're struggling to keep up with the pace of hiring at this point, and that's led to the SFC and HKEX sending letters to some banks, warning them that the IPO filing quality has declined because of these overworked bankers and other factors as well. So it's really just a mismatch in that hiring pace and the deal flow.
So I guess then is the solution to hire more headcount? Is that what's happening, or what else is being done to address the issue?
It is, and banks are scrambling to hire, like what we know as assigning principals. They're the lead bankers that have to be staffed on, these deals, and. The exam body that administers these exams for assigning principals, they're telling us that exams are running all the way through Chinese New Year because banks are rushing to hire these and promote their staff from within. But at the same time, it's also not as straightforward because there's a lack of enough people to promote from within as well. These mid-level bankers who would have been qualified to take on these jobs had been cut. So as a result, they're poaching from other banks as well at this point to keep up with that demand.
And it's also the fact that the resurgence in the IPO market was almost a complete 180 from the previous years, where it was almost empty as far as deals. It's not like the pipeline was being built slowly or gradually to
just a deluge.
So that takes us then into the outlook for the rest of the year. Does the deal volume continue? What are you hearing?
Yes, I mean, there are some 400 IPO filings that are out there, so there's definitely not a shortage of deals to work on. There are a number of big ones, including Syngenta, which is expected to fetch up to $10 billion, if that pans out this year. So there's definitely, a lot of deals to work on. But at the same time, in terms of the filings, like these new filings to come in the coming months, we're hearing that, there could be some slight slowdown because the banks have to, these banks have to sort their staffing issues on these deals.
Dave, great reporting, and no surprises really. This is one of the best read stories on the terminal so far this morning. That's Dave Sebastian there, our ECM reporter in Asia, and some other corporate stories we're tracking as well, because Citigroup, speaking of banks, has boosted the 2025 pay of its CEO, Jane Fraser, to $42 million. That's a 22% increase, and it follows a year which saw the stock surge more than any other Wall Street bank. The pay bump also puts Fraser's total package for the year just $1 million behind that of JPMorgan's Jamie Dimon. China's top car makers, including BYD and Geely, are reportedly bidding for a Nissan Mercedes-Benz plant in Mexico. Reuters cites an unidentified source saying those companies are finalists to buy the plant, which Nissan plans to close by May. It's a sign that US tariffs designed to keep the Chinese out could actually bring them closer to American shores. Anthropic's completed a $30 billion funding deal from investors, including Singapore's sovereign wealth fund GIC and Coatue Management. The deal values the AI company at $380 billion, making it one of the world's most valuable private companies. Anthropic also confirmed plans to let employees sell shares in the company at the same valuation as the latest round.
Right, let's have a look at shares of Lenovo. So the earnings story was out yesterday. It's permeating in the form of more commentary coming through as it pertains to the memory squeeze. I guess if you think about the downstream users of memory, right? Lenovo, the PC makers, hardware makers are, I guess in some ways, because of price hikes, are having to deal with either margin issues or even passing that on to consumers. We're up, though, 2% up on shares of Lenovo today, so good move in the market. Win Macau coming up on your screens should be outpaced. So we're down about 4.6%. Underperforming the markets today. S'more, that's coming up on your screens too very shortly. That's listed here in Hong Kong on the back of just headlines coming through in the last few minutes or so. China tightening control over capacity to curb or address overcapacity in the e-cigarette space and property stocks. About an hour back, the home price numbers did come through, and we are looking at some declines there across the market. Not much change as far as home price trajectory is concerned.
It's 11:29 a.m. in Tokyo this morning. Japanese markets just about to go onto their lunch break, and probably for good reason, really. I mean, we've seen quite a lot of downward pressure this morning in the session. It does follow what was a pretty nasty overnight session as well on Wall Street. But the AI pain trade is finally showing up in Asia today, because all week we've been talking about how Asia was really quite insulated further up the AI value chain, disconnected, but we are getting sort of swept up in that risk-off fever today.
Yeah, I guess it doesn't help that some of these names have been bid up quite substantially, and you are getting some pressure. What's interesting to the phenomenon coming through in Japan and Korea specifically, as you get this rally taking place, implied vols actually been on the way up as well. So those two things don't normally coexist in that way. So one will have to give. But yeah, okay, as it stands, we're looking at some, not to the extent of overnight, but yeah, we have snapped back as far as correlations go there. SoftBank on your screens, earnings story yesterday, 6.5%. Obviously, you had this realization from a financial perspective on its exposure to OpenAI, but certainly the questions remain in terms of just what happens in the future as it pertains to further exposure is concerned. Okay, just very quickly, speaking of an earnings story, I have to correct myself. So my mistake, I'm sorry. We mentioned, and I think we showed you earlier, that Win Macau reported earnings. I see my ability to put mistakes and just selectively remember the correct things. It was
Wynn Resorts in the U.S.
There we go. Wynn Resorts came out with earnings. Wynn Macau has not yet come out with earnings, and there's no clear indication just yet. Could come out anytime soon, actually, on the back of Wynn Resorts in the U.S. But I was wrong. There we go. Why don't we brighten up the mood? Brighten up the mood for me, Belle. I'm sinking deeper into this.
Get you out of that malaise.
Yeah, let's talk about celebratory time of the year.
Lunar New Year holidays.
Yes.
Happening next week. Week-long closure of markets, of course, in mainland China. So let's get more with our China correspondent, Min Lo. So, yeah, obviously this is the travel rush. It's the busiest time of the year. What is going to be the spending patterns? What are going to be the travel platforms doing as well? The patterns this year, too, to watch.
Yeah, we're really expecting a bumper crop this year because Lunar New Year this year is the longest ever holiday that China has. It's 9 days. Previously, it's been 8 days or 7 days. So this year is longer than usual. So that means we're expecting people to travel for longer and spend more, increase in both inbound and outbound tourism, particularly to destinations further afield, especially the visa-free countries like Russia, Turkey, the Middle East. Of course, Europe is always a favorite destination. But bear in mind, this year's Lunar New Year also coincides with the Winter Olympics in Italy. So I don't know about you, but my social media feed has been slammed with a lot of posts from Gu Ailing and her ski events. So that has really sparked a rush to learn how to ski in China. So analysts have been saying ice and snow destinations in China is going to be quite popular. If you look at the number of ski resorts and the number of visitors going to those ski resorts in China, it's been steadily increasing over the years. And they are also benefiting from the tension with Japan because many people are cancelling their trips to Japan, which is always a prime destination for ski resorts as well. So overall, expecting pretty good numbers. And also, the Chinese government is allocating over 2 billion yuan in incentives in terms of vouchers, subsidies to encourage people to spend more on dining, accommodation, leisure, entertainment, tourism. Yeah.
Okay, Min, thank you so much. Min Lo, our China correspondent there. So clearly places like Yabu Li are in favor outside of things like, usually Niseko is very popular, right? But not.
And Hakuba.
And Hakuba, yes. If you want to venture just south of south of Hokkaido. There we go. Okay. Speaking of, travel capacity, flight capacity, if that's domestic focused, are we getting more sort of routes across Southeast Asia as it pertains to this sort of travel rush that's taking place? Just to help us understand that, joining us here in set is Zoey Wang, Global Infrastructure Ratings Director at Fitch. She covers airports in mainland China and also in Hong Kong. It's very nice to see you.
See you again.
So talk us through, clearly there's a geopolitical angle here between the tension between China and Japan. We know what the headlines look. There has been a drying up of tourism flow, but what are you seeing as far as industry capacity is concerned, flight capacity?
Yeah, I think for the international capacity, I think this is always on a recovery trend, and it's very obviously trend. But I think the overall dynamic market is still very reshaping the markets, and means the top destination always change compared to the last years. Last year, Japan always on the top of the list, but this year it disappeared on the top list, and South Korea and other the South Asia countries now climb up. And definitely the geopolitical issue will be a very important factors in these pictures. Some people, because of afraid of the geopolitical issues, and they cancel their Japanese flights, and they transfer their interest to other similar places, and South Korea will be a very good alternative, and also the South Asia, some places, so because nice weather and
cooler weather, warmer weather.
Warmer weather, especially during the winters, and also the value for money and the distance, and there are other the tourist promotion things, and it will be a very good replacement for the Japan. So actually, I don't think the demand is shrinking, just shift to the other places, and the air carrier at the same time, and just cater for the demand. They change their the capacity to other markets just for the high profit and exactly.
And what does the spending look like? Are people prepared to spend bigger this year, do you think, than in years past? Or what's that going to look like?
Yeah, I think this is a broad topic because people overall they are concerned about their their overall market may not be so good, and people may be concerned about the consumption power. But I think now people may are willing to spending on more valued things, especially experience-led travel. So we actually have noticed some the phenomena and the trends that people are willing to spend more travel experience things, and also the restaurant things. And so during Spring Festival, we expect there will be some spur deal in the consumer sectors.
Where are you seeing the fastest pace of increased flight capacity? Which specific routes? From mainland China?
Yeah, from mainland China, I think for the domestic, the biggest, the busiest city, we're still in the main hub, the Beijing, Shanghai, and Guangzhou, and Chengdu, some things. But we are also seeing some trends that the very popular, the destinations coming up, the Mimi just mentioned, that the northern parts, the Changbaishan, and also Harbin, and also south part like the Hainan, because some northern people want to fly to south to enjoy the warm weather, and the south people want to fly to north to enjoy so icy and snowing weather. We just have a different experience during Spring Festivals. So we see a very interest trend the north and south exchange trend. But for the international capacity, that will be different because some flights previously that fly to Japan, now they redirected the flight to the South Asia and Hong Kong, and also also some to long routes the Australia now become generally to more popular destination, and also Russia because they benefit from the visa issues and
And as Min was saying just now, this is a really long holiday period. I think she was saying the longest one we've seen at 9 days, and we've seen it 7, 8 before. Do you think that also changes the makeup of people that are searching for destinations that are further afield, like, as you said, Russia or Australia?
Yeah, exactly. That will be benefit for the long haul period. And also, I would like to mention that for 90 days holiday, actually it's longer than usual, right? These are also the changing the travel pattern, because people normally would like to do the 2-stage travel. The first they will back to hometown for the travel, the family reunion, and then they will take another travel for vacation or more the tourism based, just have another experience. So actually they gradually change the travel pattern, and there we actually see the overall industry change compared to the last years.
What about international arrivals into into China? How has that changed? Because we've also seen, I think, in recent months, visa restrictions or visa-free access being granted, and I wonder what you're seeing on your front.
Yeah, I think this may not be specific for Spring Festival because it's a very peak season, and foreign investors may try to avoid this peak season. But overall, visa the favorable visa method definitely will help to boost the foreigners come to China. And from the number perspective, we also see the last year actually more foreigners coming to China. Yeah.
And what about your outlook for 2026? Does this sort of tell us where things are headed? You know, we've talked a lot about this shift more to experiences and away from sort of luxury consumption, for instance.
Yeah, overall, I have to say, for the overall outlook for 2026, we still maintain the neutral outlook because it is definitely supported by the normalized growth in both international passenger growth as well as a very strong domestic base, but it also has some headwinds like the overall uncertainty in the geopolitical issues and also some tension strength. So, yeah, we still overall maintain the neutral outlook.
Before you go, just want to ask you as a final question. We almost treated you, I apologize, as a travel agent, but of course your broader remit, of course, infrastructure, and just hope it happens to cover airports. The reason I bring it up that way is because infrastructure is a very big push in China, given the spending that the government wants, right? So what's your outlook in terms of just the financing conditions out there, project financing, private debt, and all these things that come together under your world?
Yeah, I think for the finance perspective, I still have a very the positive outlook for the Chinese influence because it's still a mainstream for the government's priorities. Right. Yeah. So basically for the financing, I don't have much worry about this, and actually the government supports the government banks will always support this kind of project. Will be the fundamental of the economies, right? So for the other stream like the private equity and for the the high quality infrastructure projects, they will also have interest of this.
Okay.
Zoe, well, Happy New Year then, and good luck braving the airports then if you are one of the people that's travelling next week as well. But that was Zoey Wang there, Global Infrastructure Ratings Director at Fitch Ratings. And a reminder of our new online feature. This is the Bloomberg Video Hub. Subscribers can explore live streaming, news, interviews, all of our Bloomberg TV shows, documentaries, reporter analysis, and more. So do check it out at bloomberg.com/videos. This is Bloomberg. Welcome back. Here are some of the big political stories that we're tracking today. And Goldman Sachs' top lawyer, that's Kathy Rumler, is leaving the firm following the release of documents showing her links with sex offender Jeffrey Epstein. In a statement, CEO David Solomon says he respects her decision to resign. Rumler was hired by Goldman in 2020 and later became its legal chief. The bank has said she disclosed to the firm's leadership at the time that she had previously dealt with Epstein. Bloomberg's learned that Venezuela plans to grant more oil production land to Chevron and Repsol. Sources say officials in the country's capital are preparing to award the exploration and production blocks as soon as this week. U.S. Energy Secretary Chris Wright has toured a project operated by Chevron in Venezuela's Orinoco oil belt. Washington's pushing for private companies to rebuild the nation's energy sector.
Meanwhile, OpenAI is warning U.S. lawmakers that its Chinese rival DeepSeek is using unfair methods to extract results from leading American AI models to then train the next generation of its chatbot. That's according to a memo reviewed by Bloomberg. Now, OpenAI accused DeepSeek of using distillation techniques to free ride on the capabilities developed by OpenAI and other American labs. Now, OpenAI is said to have started raising concerns about the practice after DeepSeek released the model last year.
Yeah, and just taking a look at AI stocks generally, or two specifically in Hong Kong today, because you are just seeing really big gains here for Zhipu and Minimax. Of course, the whole story has really revolved around Zhipu over the past 24 hours or so, but they did just actually launch an update to their foundation model, GLM, now the 5th iteration, and we've seen a very sharp rally off the back yesterday in the session. I think gains are around 30%, but again, extending into the session today. And a lot of analysts initiating their coverage and having pretty bullish price targets on both Zhipu and Minimax that listed within a day of each other.
Yes, I remember that week was quite busy, and who would have known at that point in time that shares would be trading at these levels, right? We were just in the 200s on some of these prices too. Well, that's just also to underscore this broader trend of this new generation of Chinese entrepreneurs, Chinese billionaires, AI billionaires, of course, right? This rapidly building huge fortunes, a lot of them hitting the markets, raising a lot of money, and then the stock prices go through the roof. This quest for technological independence on the part of Beijing. Now, for more on today's Big Take, that is the topic here, our wealth reporter Diana Lee is with us here on set to talk us through, of course, this rising cohort of new rich.
Yeah, so this is probably going to be your most comprehensive list of all the Chinese individuals who are winning from this AI race. And they really represent this new generation of tech elites in China that are pretty different from the previous generation of the consumer internet tycoons who built their wealth about a decade ago. So for this generation, they really build their wealth by building their company business goals alongside with the Chinese government's goal of technological self-sufficiency, especially at a time when there is a lot of restrictions from the U.S. in terms of AI chips and software. These Chinese founders really find a way to fill that void in China domestically. And essentially, they're helping China to challenge the U.S. dominance in AI. And the message for us is that in today's China, the wealth creation is increasingly intertwined with the country's goal of technological independence.
You're just taking a look at some of those names there, and you can see here, there's Junzhe and Liu Debing from Zhipu as well. I mean, they were the two ones that listed of late. But what are sort of the demographics of these people?
Yeah, so if you look at their backgrounds, a lot of them come from very elite academic or engineering background, especially along the silicon supply chain. A lot of them come from the elite engineering schools like Tsinghua University, Chinese Academy of Science. One of the richest person on our list is Chen Tianshi. He is the founder of Chinese AI chip maker Cambricon, and this guy actually entered college at the age of 16, so he was part of this child prodigy class admitted by the Chinese Academy of Science. So these people's talents are discovered really early by the Chinese government, and if you look at their professional background, a lot of them haven't really studied or worked outside of mainland China. You look at founders like DeepSeek, Unitree, so there's more of these like locally educated homegrown talent. But on the other hand, we do see an increasing number of the talents who used to work or study in the U.S. decide to come back, start their own companies in China. For example, we have two AI chip maker companies founders. They used to work for NVIDIA and AMD, respectively. More Threads and MetaX. So these people are probably we're going to see more and more of that because the visa hurdles in the Trump administration makes it very difficult for Chinese students to study or work in the U.S. So they will probably come back to China more and joining this increasing number of the locally AI talent as well.
It's a good mix, right? Because it previously used to be a lot of the homecoming, people who get educated in China, go abroad, further education, build their careers, and come back. That's a good point, of course. I'm just looking at the bio here of Chen Tianshi, right? 40, he's $22 billion, PhD in computer science, University of Science and Technology of China, which is interesting. Anything else that surprised as you guys came up with this list?
Yeah, so I guess the most surprising thing is that most of our readers probably have never heard of these names, and these people are extremely low-key. They try their best to avoid media as much as they can. So that kind of low-keyness is really strategic because on the one hand, they understand the key message from China is common prosperity. The last thing they want to do is to brag about their wealth or spend their money lavishly. So, and on the other hand, they also don't want to attract unnecessary attention from the U.S. government, as they don't want to end up on the entity list or sanction list that will create some friction for their business. So even if they're billionaires, they understand that invisibility is their biggest luxury. And I just want to add that this list is by no means comprehensive because we will likely see more and more of these upcoming new names in 2026, especially with a group of Chinese AI companies trying to do IPOs in both the mainland market and the Hong Kong IPO market, which is quite popular these days. So we will keep tracking these names. They'll probably be coming from AI hardware, software, machinery, infrastructure, everywhere. So yeah, we will keep profiling these names. So please stay tuned to our coverage there.
Will do.
Yeah, fascinating. And as you say, more billionaires on the way, it seems, if we take a look.
Less invisible because of this list, but yes.
We'll find you. Yeah. And we'll profile you. Yeah. And then ask you on Bloomberg TV.
Yeah, you sound like Liam Neeson now, but yes, anyway.
An attractive proposition.
Yes. You can check out Diana's piece on the Bloomberg terminal or also on Bloomberg.com. Fantastic big take there, of course, on China's rising cohort of new AI billionaires. Right, welcome back. So before we get into this, of course, a very long holiday, markets are going to be shut across mainland China. We have a couple of days off in Hong Kong. It's, of course, the Lunar New Year. Most people that I know have already started, if not checked out mentally. They're probably still at work. But that's just to say, of course, it is as we were just talking about, right, the longest stretch of holidays, right? And
9 days.
9 days. And we have almost a tradition now on Bloomberg TV. So this is Bloomberg merch.
This is my first year, so I'm excited. You're driving this.
This is number 2 or number 3 for me. So these are our mystery boxes, and obviously we'll find out. Why don't you proceed with yours? I mean, it's going to be no surprise, of course, that because we're going into the year of the horse, it's some variation of.
Oh, okay. Like a unicorn, could it be? Or is that too far?
I don't know. I guess you have to open yours. We're going to find out very, very soon. Yeah, so
okay.
Shout out, of course, to Bloomberg merch for this.
Yeah.
Okay, what do you have?
Yeah, we should clarify. It's Bloomberg merchandise.
Yes.
Oh, wow.
What's yours? Okay.
It's a green horse with a...
Mine is yellow. And
okay.
I believe... Okay, so that's the mystery box, okay? So
what's the mystery here?
Huh?
What is the mystery?
Which of the 4 types? Read the fine print, Belle. Yeah, which of the 4 types of horses?
We had so much time to prepare and you didn't give me instructions.
Well, now that I'm taking away the element of surprise. The Belle's is there and this is mine. So this just basically completes the set up until this point, of course, in terms of this. And I'm going to place it here, just a reminder for our viewers.
Oh, it's a mahjong horse.
That we're coming off.
I feel like I got the winner. This is the best one.
Years of the tiger.
I'm going to put mine down there.
The rabbit. And then, of course, we're coming up the year of the snake. And I'm just going to squeeze in, there we go, the 2 horses that are, should they be back to back? Oh, no, let me face the camera, like me and Belle.
Yes, have a cavalry there.
There we go. All right, so, to all our viewers who joined us, of course, the last year of the snake, thank you so much. We wish you, of course, happiness, health, prosperity. Hug your family, spend time with your loved ones, of course, and of course, don't forget about us. We'll be back on Monday.
It's not that dramatic. We're broadcasting Monday, Thursday, and then Friday.
I had checked out, and I was pretending it was a very long holiday. But okay, thank you so much for that, Belle.
We'll be back on Monday, but...
hard at work, dark and early.
Who has checked out mentally? I don't know if that's you.
We can't afford to. This is our business.
All right, well, that is it for the China Show for this Friday. As we said, see you again on Monday, and leaving you with a last look here of the Hang Seng as we go into the session. 90 minutes into trade so far, and we are moving to the downside.